Welcome to this webinar series, which is a part of the Investor Education and Awareness Initiative of Aditya Birla Sun Life Mutual Fund in association with Outlook Money. The budget was announced last month, but some tinkering is still going on as per the demand of taxpayers. For example, the rule on the removal of indexation benefit on real estate has been changed, with homeowners having two options now. But what is most interesting for people is how the new budget proposals affect them. So here we have a discussion on Union Budget and You to clarify all your doubts. I'm Niti Sinha, editor Outlook Money, and I have with me today three panelists to discuss the topic. I would like to welcome Mr. K.S. Rao, who's the head of the Investor Education and Distribution Development at Aditya Birla Sun Life AMC. Mr. Rao has been striving to take financial literacy and investor education to various demographic segments. Next, we have Mr. Harsh Roongta, a personal finance and tax expert, SEBI RIA, and founder of the Association of Registered Investment Advisors. We also have with us Mr. P.V. Subramaniam, chartered accountant, author, and trainer, joining this very relevant discussion. Welcome, gentlemen. So let me kick off this discussion with a question to you, Mr. Rao. What was the biggest takeaway from the budget for you?
Yeah. Good morning, Nidhi. Thank you so much for having me, and it's great to be part of this initiative and be with the learned, Subra and Harsh sir. And glad. Union budget. I think there is. Before I start, I can say in the earlier dates, I always used to see when a union budget comes in. There is a one section gets subsidy, and one section gets a rebate, and common man will always be in the debate. And it's like, today things have changed a little better. And this budget, the best part of the budget I look at is it is not focused on the short-term issues, but it's focused on the very long term. And if I can look at this is the seventh budget coming from Honorable Union Minister for Finance, Nirmala ji. And each of this budget is towards Atmanirbhar Bharat. It is not for today what is in for me. There could be a short sometimes pain. The pain on the capital gains that we will discuss during the course of these conversations. And but this budget has focused predominantly, it's a journey towards our roadmap towards Vikshit Bharat. I looked at those nine priorities which Madam spoke about, and each of the priorities are very important in for the country and prospering economically. It could be agriculture, which is first sector when she spoke, and the second part is the employment and skilling, and this time it's a totally newness in that, and human HRD and social justice, or it could be a manufacturing and services. It's on the urban development, it's on the energy, and it's on the innovation, it's on the next generation reforms. Each of these things have changed. But today, when it comes to us at Outlook Money, and we all discuss us is about the personal finance. What is in for me? In that, what is in for me, there is a lot. Probably it is a simplification, and there is a nudge towards making people move towards a new tax regime, and that's where things have moved better for it. And probably the best part I can look at is the taxation structure which is coming for the new tax regime. Somebody almost up to 6.5 to 7 lakhs, you don't need to pay the tax, and for others there is a structure which is made much more easier and much more simplified, and changing in the standard deductions. Probably these things we can discuss as I look at this budget in two ways. One is the growth oriented, and the second is on the taxation side. Yes, some better pills that we will have a conversation around.
Mr. Rao, of course, gave a broad idea about what the budget was about, but coming to the most sensitive topic, or the one that concerns people the most, which is taxes. Taxes is a big pain point for a lot of people, especially, when the news of the removal of indexation came with the budget, though the rollback has now happened in terms of providing a new option. So what do you think works better for investors, Mr. Roongta?
So two things before we speak about the indexation. I think a very important thing was done about taxation, which was not really noticed, and that was the reduction in TDS rates. Now, if you look at the data, 90% plus of Government of India's tax collections, or more than that, happens on account of TDS. I think it speaks volumes. And obviously, they have now got data saying how much of that TDS is now being refunded. And because now the refunds are faster, there is no point in taking in more TDS just to bump up revenue. So I think it speaks about the confidence that the government has in terms of compliance, that it has sought to reduce taxes. And I would like to believe that it is the first in a series of reductions that we will see. And it is very significant, although I don't know for what reasons they have chosen not to sort of highlight that specific change. Uh, as far as indexation is concerned, obviously, uh, you know, just think back. Uh, how much does tax affect investing decisions? The one place where tax affects investing decisions is fixed income. So obviously, the reason say a PPF is or those kind of schemes are popular is because of the tax exemption as well as the tax deduction that was available. Deduction now no longer, is very valuable because most people are moving to the new tax regime, but the exemption continues to have an impact. So clearly, that has an impact. But I don't think anybody invests in gold, or anybody invests in real estate, or anybody invests in equity. Maybe equity to some extent when it was exempt. There was a case to argue that, the tax deduction changed the way investors would invest. Now, I don't think that it impacts choice of investment. Sure, to the extent you have made investments, your return is impacted. And to the extent the impact of indexation was, retroactive in nature, because you have been promised a stable tax regime, and based on something, you chose to also take that into account, while investing, especially fixed income. So now you see that the rollback has happened only for land and building. Okay. And I think that's very, it's unfair on the fixed income investors. You could do it for investments made after a certain date, but to not allow it to investments already made, I think is unfair. But I think what has been done. Impact on investments, as I said, I don't think it will have any impact in terms of choosing which investments, except fixed income. Fixed income, it obviously will have an impact.
Right. So Ruta, of course, has very articulated views on what this new tax regime means, and because a lot of people are kind of saying that it takes away the incentive to invest. So, Mr. Subramaniam, would you like to weigh on it? And also, Mr. Rao was earlier talking about the simplification of tax regime, which is a big plus in this budget. So, could you talk about these 2 points and tell our viewers about it?
I'm sure Mr. Rao and Mr. Rungta are closer to the BJP government than I want to be. So yes, the government has done a good job over 6-7 years. Markets have done well. They've built infrastructure. But taxing debt instruments without indexation with retrospective effect, which means Nidhi, a 60-year-old man who started investing at the age of 20 in a debt fund and thought he will start withdrawing at the age of 60 is suddenly going to pay taxes at flat rates. This is unethical and immoral, nothing short of that. Okay. In 2023 March, she said this facility of investing in the debt funds will be available. Taxation will be indexation plus 20%, and that will change from 1st April 23. So in 24, she comes and says, oh no, this is changing from 1961 or whatever, right? That is unethical, immoral. I actually had thought after the Vodafone case, retrospective amendments won't come. So that to me is wrong. Second, the whole orientation of creating the new taxation regime, removing of ATC, look, it does not affect me at all. Okay, I'm past the stage when I was worried about ATC, but a lot of youngsters needed a push and a shove to put into PPF or ELSS or things like that. We have all benefited by this. All the three of us are at an age when we have benefited by all this ATC. Have we reached a stage when the Indian population does not need ATC, does not need ATD, which is for medical insurance or things like that? I don't think so. 90% of the population, no. Another important thing is all the changes are affecting only those people who are paying taxes above 15 lakhs, right? So that is 90% of your tax paying people are not even impacted by these things, but it is still unethical. They should have said taxation of debt instruments will be at flat rates or at 12.5% or whatever from today. It can't be from yesterday or 40 years back. They have just not considered that. Even the great rollback which they are talking about, you won't even believe it. It's available only for the individual. It's not available for the NRI. It's not available for partnership firms. It is not available for companies. Just for this, they have made this for individuals. They have made the change. Yes, of course, impacting people will be more as individuals. I still agree, but this is just nonsensical. Another important thing which I want to still cover is the changes are made very, very arrogantly. The statement that they make, अरे capital gain तो ऐसे ही मिल गया, you didn't put any effort, so we have a right to charge tax on that. If you are so good about removing indexation, I think they should remove index pensions and index salaries. Let Babu salaries not be indexed, let their pensions not be indexed. Then I will believe that you're walking the talk. This is nothing short of cheating. I'm not impacted. I'll pay taxes, but a lot of people will be impacted.
Just want to add to something that Subra said. In fact, the rollback is worse than what the partiality of that rollback is much worse than what Subra has said. As he said, it applies only to individuals and HUFs. Okay, but more importantly, it applies only for calculation of tax. Okay, so if because of indexation you were to get a loss, now that loss will no longer be calculatable. So it is just reducing your tax liability even where it has been rolled back. It is not really, so it is clearly a breach of promise. And I think the arrogance that Subra mentioned, I think was in very full display when a very senior official even mentioned that stamp duty is not deductible while calculating the cost. I think, and this is a very senior official. And, for that official to mention that, that would require an amendment to the law, and no amendment has been made to the law. So that is a personal view of the person. But expect now that officially that statement has been done, it has not been retracted. We expect problems to happen when assessments come up. Okay, because there is no specific provision where which says that stamp duty is allowed to be taken as a cost. Okay, it was taken because it's a normal part of cost as per normal accounting principles, which any person will tell you that it is part of cost. So these kind of statements, they betray a certain arrogance, as Subra would say. Okay, which I don't think is warranted.
So those were really strong statements from Mr. Rungta and Mr. Subramaniam. And of course, our viewers would get some insights on what these rollbacks or introductions of new, tax incentives mean. But another thing that we have been hearing about is new tax regime is about simplicity as opposed to the old tax regime. But we also see new deductions being brought in. So, for example, the standard deduction has been increased just for the new tax regime, by the way, to 75,000. And there is, NPS taxation change that has happened also for the new tax regime. So how much will that help in that case? And how do we see the new tax regime in that light, Mr. Rungta?
Very clearly, I think already, even without these additional incentives, the new tax regime has already, I think, been adopted by more than 73/4 of the people who have filed taxes this year. I expect that to go up further. Uh, Whether good or bad, I don't know, but definitely I expect that to go up further. Both of them are very significant deductions, both the deductions that you mentioned, whether it is standard deduction or whether it is the increase from 10% to 14%. Employers' contribution to the NPS is now allowed up to 14% for private employers also. Earlier, that was only applied for government employers. I think it is a very significant change, and I think it will spur uh, further adoption of new tax regime. Please remember, for very high taxpayers, by removing the 35% surcharge above 5 crores, they've already, there is a sort of a incentive for them, the very, very high taxpayers, to move to the new tax regime. I think these kind of deductions will ensure that many more people move to the new tax regime. It is a moot point whether that is good or bad, as Subra mentioned. Okay, I have my own views. I don't think tax deductions are the right, although that is what we have been used to. As Subra said, all of us have benefited from those deductions. But I think, personally, I think the direction is right. Income tax is not the right way to incentivize. Taking medical insurance, taking life insurance is something that's good for you. Uh, you incentivize it in some other way, not through tax. So at least as far as this is concerned, I disagree with Subra. I think very clearly tax should stand on its own, and I think the direction towards the new tax regime, I think is pretty good.
Okay, so of course, that is a wider view where we are having a very interesting conversation about new tax regime versus old tax regime. But all in all, the other observation I have from the budget is that there looks like there is an impetus towards retirement savings. Why I say that, that of course the NPS taxation, and the other thing that has come up is the government has introduced this NPS Vatsalya scheme. So, but the question is that whether people will be encouraged to kind of save for the retirement of their children when they might not be saving for their own retirement. What are your views, Mr. Rao?
Yeah, Nidhi. Probably, thanks to this odd debate, I mean, I never knew it is going to be a very hard debate. Harsh and Subra making it's, yeah, I mean, probably, I mean, both of them are the proven financial advisors and planners over a period, decades of experience. This only shows for all of us is as we go forward in our personal finance, I mean, probably one area we need to, one assumption, any budgets coming in, probably take with a pinch of salt and be ready and prepare for the unprepared one and don't predict, and anything can happen on the taxation. And coming back on NPS Vatsalya, probably, it looks, it is a nudge again. I mean, it's a nudge to promote NPS, and it's a nudge. I mean, as earlier Subra was talking about, tax saving is a nudge for us to start investing. And NPS is, I learn Vatsalya, I look at it as another innovation within the NPS to promote NPS. And how that will work and doesn't work, I'm not very sure at this point. But definitely, it makes somebody I may not be thinking for my retirement, but mostly parents will think of their children and savings for the children. That comes as a first priority, and this will also give starting little early and power of compounding happen for them. And some of those well-off parents today, if they start for the children, that can be another nudge. I think in the previous, before we started conversations on this, before recording started, we were just discussing about how the spending habits of the people have changed. Probably NPS Vasalya is one area which can give the savings habits of the people. I mean, if somebody is starting for her daughter or son, I mean, one NPS for Vasalya account, they tend to continue after 18. That will give parents can open, that can be a gift, and that can be easily portable, and that is easily transferable, and money keeps growing, and you made a move. Today when I go to most of these colleges, I can see the first thing the children do is their recurring, still they ask for recurring deposit because their parents suggested. Probably NPS Vatsalya can change the mindset of the people, and I love that name of Vatsalya. You can look for it, and it's a I mean, probably that for me, NPS is nudging people to save, and Vatsalya could be a coining of the right word. And well, how many people will take? Yeah, you have a big question there, because I myself not planning for my retirement. Can I plan for my children? That's a big question. Probably at least this nudge can work towards you need to plan for your retirement. And while planning for it, probably you can also look for what you can teach your children. This can be a tool to educate your children on the power of compounding and starting early, and and show that Vatsalya in a very different way.
Okay. So, yeah, that's interesting. But my only concern is that maybe it will give a push to people to, have their own NPS accounts apart from their minor children. And if that happens, then that's great. So, yeah, definitely a nudge, like Mr. Rao said. We'll have to see how much that nudge works, of course, in the long term. So, Mr. Subramaniam, coming to you, another demand that persists about taxation is the removal of GST, especially from health and life insurance. What do you think about that?
I seriously don't know whether it will work because most of the revenue goes to the state government. State governments want the money, so they will. Why don't they adjust to the government and say, okay, in wherever we are in power, please levy only 5% GST and don't give anything to us. That hasn't happened. Nobody wants to give up the revenue, so I don't think that is going to be very easy. But if there is enough pressure, the government will make the change. As of now, they have not made the change. Whether they'll come down from 18 to 5 or something is I'm not very sure. But in a country where the quality, like you compare yourself to US or Australia or something and say they also have 30% tax, they get primary education and secondary education free. They get high quality health care service. We don't get any of that. We pay 30% tax and we pay through our nose for our children's education. So therefore, there is some sense of shame that the government should not at least levy taxes on things which they should anyway be providing. So healthcare and education is what they should be providing. To charge GST on that sounds wrong, but then many things which many governments do sounds wrong. So, for example, removing indexation means a tax on inflation, but they have removed it. So I don't think, but there is enough pressure on them. If so, I mean, if push comes to shove, giving up 70,000 crores is not too much of an issue. They'll just give it up. But that move is political. So maybe they'll make it 5 and then make it 7, 12. They'll change. But right now they may do it. But with 4 state elections coming up, possibly they'll give it up.
Okay. No, my question was also from the policy holders' point of view, because, it's only recently after COVID that people have really started taking health insurance a bit more seriously than, they did before. And GST is something like, I mean, that's a common perception that it makes your premium expensive, etc.
Of course it does, especially for the super senior citizens. I mean, anybody above 70, it gets ridiculously high. The premiums are high and then 18% on that. Look, they can do something. They can at least say for people above 60 or 70 or something, they can get more tax concessions. You say, okay, up to 10 lakhs, there'll be no income tax. There'll be no GST for them, something like that. It's ridiculous to expect an 86-year-old to pay almost 1 lakh of GST premium of in health premium and 18,000 bucks hurts.
Yeah.
Which is not deductible or anything. At least give a deduction in the tax. So at least you're cutting down the impact by 30, 40%, 30%. Nothing. So yeah, people have no choice. If you take the insurance, you pay the GST.
Could I add something to that,
Yes,
maybe,
please.
if I may?
Yes.
Right? I think this demand for reduction is rather misplaced. I think it's tokenism at its best. Because just imagine, you're paying 100 rupees premium, 18 rupees as GST, so it becomes 118. In that 100 rupees premium, if the insurance companies say incurring costs of say 20 rupees in commissions and other costs on which it pays GST, okay, so on 20 rupees say that 18% becomes 3.6. Now even if this 18 goes away and the premium becomes 100, to maintain the same level of profitability, Okay, they will have to hike up the premium from 100 to 103.6, which is because earlier that 3.6 was not cost, because they could set it off against the 18 rupees. So and you will see those hikes happening. So a better way to give the benefit would be to reduce the GST, bring it to the lower level, okay, so that the 3.6 continues to remain as a credit and some benefit is given. Second, we must remember that the insurance industry in India, or even generally, the passing on of the tax benefit will be eaten away by the industry. Okay, simply people have already hiked rates. They will hike it even more, citing all kinds of things. So, will the ultimate client get ultimate policy holder get that benefit? Okay, I think is a key question. I don't have a solution. So, unfortunately, I'm just pointing out problems, but it is a problem, and I think we must be cognizant that there is a problem.
That's a tricky question indeed. And, after a point with the new tax regime becoming more, looking like the government is giving an impetus to the new tax regime, I think the investors, customers, policy holders will have to make decisions on their own, is what I believe, because, that is how it is progressing. But coming to the end of this very lively discussion, I think, and very, very relevant, I this question is to all of you. Can each of you list one positive and one negative change in the budget? So starting with you, Mr. Rao.
Okay, thank you so much. Again, probably, starting and ending. I mean, yeah, as earlier Harshji was telling, right? It's one thing which we spoke about, the TDS part and the part of simplification. And TDS has become less tedious today. I mean, that's one good part I can look at, and it is also created slowly nudging towards a new tax regime, and simplification is the one. And the other part I always look at is one side we spoke about the simplification in a bigger way, and the negativity is bringing complications in the simplification. One, we have added layers of the taxation slabs, the first part, and which could have been avoided when we say it's a simplification. Second, as earlier Subra sir was mentioning about these capital gains, and even Arji was talking about, somebody who started the debt investment till other day, probably there, even if you have changed that, it could have been grandfathered. That is, I mean, the way earlier we have done many a times. I mean, 2018, it was grandfathered for equity, and
Yeah.
why not now it could have been done. And Amphi is represented on this place, but I'm not very sure what is the positive outcome. That I look at as a negative part. And second, people, every union budget when it is coming in, and if it is more so coming from the same government, same party, and people expect the continuity of what I spoke earlier, what I am speaking now. The new government very differently comes. Yeah, it can happen, but this is the negative part I look at.
Right. Mr. Subramaniam.
I'm desperately searching for something positive, but nothing too much negative other than the non-grandfathering of debt. That is bad. Simplification, I'm really searching because it's not really changed much in terms of simplification. So the same thing is there. The readiness of the government to accept returns happens only on 15th of June. Okay, till 15th of June, all the data is not updated. And you say 31st July is the last date. That is, I think, ridiculous. You should give at least 90 days after you are ready to receive. You are not ready to receive on 1st of May because 31st May is the last date for tin returns and all that. So by 15 June, you're ready. After that, you give only 45 days. I mean, I still file mine on time. And like Harsh said, all the taxes paid in advance. So what big difference? I got my refund, by the way, uh, just 230 rupees because I had calculated better, perhaps. But I'm saying people should get little more time. Simplification, I'm searching for the simplification. Nothing much has been simplified. So yes, more simplification is possible. And I think indexation, even for salaried returns, let's say this year the limit is 7 lakhs. Next year the inflation is 7%. So straight it should go up by 7%. Okay, so next year's limit should be 7,50,000. Just adjust for inflation. Don't come and give from 7 to 750 as if you're doing me a big favor. You talk of standard deviation. It was 50,000 some in the last century. Now you made it 75,000 and you're telling me you're doing me a favor. You got your maths wrong, madam. You need to get your maths right. I don't see too much positive, so I'll stick to my negative.
Right. Mr. Rungta, coming to you now.
Positive, as I said, is some level of recognition that we see that we are reaching the end of trying to extract more taxes. And I think that recognition comes through in the reduction of TDS. Uh, the biggest negative is not what is in the budget, but what has been promised in the finance minister's speech. That is the so-called simplified tax code. Okay. When I hear simplification, okay, simplification will simply mean more complication. Okay. At least whatever is the tax code today, it has a established jurisprudence, and there are case laws, and there are circulars, and there are things like that. You change that, the established order, without giving any benefit. So you're supposedly just reordering it and making it simple. It won't become simple, it will become more complicated. So yeah, more work for people like us, but much more difficulty for taxpayers, and I think that should be avoided. So one needs to be very careful. What is the objective of simplification? I think that objective must be clearly stated before any simplification is attempted. Uh, that is my, and the language should stick to what is the, because at least, as I said, there is existing jurisprudence, there is established history of case laws, etc., so that you have some settled position. I'm very apprehensive of the promised simplification.
I
Thank you
think
so much, gentlemen, for putting all your views on the table very transparently and making it a very lively discussion, which, in fact, throws a couple of story ideas for me. Mr. Subra wants to add something. After that, I'll conclude the session.
Yeah, Nidhi, in 1986, when I passed CA, I was told don't practice in taxation because taxation is going to be simplified. फिर कुछ CA का काम ही नहीं रहेगा. I think in 2096 or 2996 you can still make that statement, and it should sound hollow. We are here to create work for chartered accountants and lawyers, and the best of luck to madam.
Okay.
probably Subra sir, you put it very rightly, and it is taxation, right? It's always taxing for every one of us. And as
No,
Benjamin
but no. But for chartered accountant, it is paying. For you, it is taxing. For chartered accountant, it's paying.
Yeah, you are right. In the last 7, 8 years, I was just looking at without filing my returns without the help of my friend chartered accountant. But now I need more of him than less of him for 10 years before.
Tax, like Mr. Rao said, will always be taxing for the end taxpayer, if not the CAs. But so thank you so much, gentlemen, for joining this discussion on the union budget. And we'll see you again for more such lively discussions. Thanks.
Thank you. Thank you so
Thank
much.
you, Nidhi.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.